Have you ever opened your bank app, looked at your bank balance, and wondered how it dropped so fast? Your income just arrived a few days ago. Your salary hit your bank account. For a moment, it felt good to see money there. But then the bills started coming out. Rent, utilities, subscriptions, groceries, transportation, maybe a credit card payment. And before you really noticed it happening, your bank balance slowly moved back towards zero again. You start asking yourself the same question many people ask every month. Where did all the money go? The strange thing is that most people experiencing this problem are not irresponsible with money. Many are actually trying to do the right thing. They show up to work, they earn their income, they try to manage their expenses, they pay their bills on time, they avoid unnecessary spending when they can. From the outside, it looks like everything should be working, but inside the bank account, the numbers tell a different story. One of the biggest reasons your bank balance keeps going back to zero is something simple but powerful: fixed expenses. Fixed expenses are the bills that show up every single month whether you like it or not. Rent or mortgage payments, electricity, water, internet, insurance, phone plans, transportation. These expenses don't wait for you to feel financially comfortable. They arrive on schedule and immediately start pulling money from your bank account. What makes this situation even more difficult is that many of these expenses have slowly increased over time. Rent is higher than it used to be. Groceries cost more. Gas costs more. Subscriptions quietly add up. Even small price increases across many categories can slowly squeeze your bank balance without you noticing it immediately. Another reason your bank balance resets so quickly is timing. Most people receive their salary at a specific time of the month, but many of the largest expenses are scheduled right after that paycheck arrives. The moment your income hits your bank account, automatic payments start activating. Rent might leave first, then insurance, then subscriptions, then debt payments. Within just a few days, a large portion of your income is already gone. This creates the illusion that money disappears instantly, even though technically it was already allocated to bills and obligations. The paycheck arrives, but most of it was already promised to something else. There is also something called variable spending. These are the smaller, everyday expenses that feel harmless in the moment. Coffee, lunch, transportation, small online purchases, household items, a quick meal when you're tired. None of these feel like major financial decisions, but when they happen regularly, they quietly chip away at your remaining balance. The challenge is that variable spending often feels justified. You're not buying luxury cars or expensive vacations, you're simply living life. You're buying food, replacing necessities, handling daily needs. But small expenses repeated many times throughout the month can slowly drain the remaining money in your bank account. There is also an emotional side to money that many financial conversations ignore. When your paycheck arrives, it can create a short moment of relief. After working hard all month, seeing your income in your bank account feels rewarding. That moment sometimes leads people to relax their spending just a little. Maybe you buy something small to reward yourself. Maybe you finally purchase something you delayed earlier. These moments are completely human, but they can also accelerate the cycle of money leaving the account. Another hidden reason this cycle happens is because many people are operating without a financial buffer. A financial buffer simply means having savings that protect you from unexpected problems. Without that buffer, every surprise expense has to come directly from your current bank account. Imagine saving a few $100s and feeling like you're finally making progress. Then suddenly, the car needs repairs, a medical expense appears, something breaks in the house. Suddenly, the money you saved disappears and the bank balance drops again. When this happens repeatedly, it can feel like your financial progress keeps resetting. There is also something called financial pressure. Even when nobody is demanding money from you, there can be a quiet pressure in the background. The pressure to pay bills on time, the pressure to handle emergencies, the pressure to support family if needed, the pressure to stay responsible. Carrying that pressure every month can make it feel like your bank balance is always under attack from different directions. Social comparison can add even more pressure. When you see people online traveling, buying new things, or upgrading their lifestyles, it can create the feeling that everyone else is moving forward financially faster than you are. But what people rarely show is the financial reality behind the scenes. Many people who appear comfortable are also managing debt, payments, and financial stress. So if your bank balance keeps going back to zero, it does not automatically mean you are doing something wrong. In many cases, it simply means you are living in a system where income and expenses are constantly competing with each other. The important thing to understand is that breaking this cycle usually doesn't happen through one big change. It happens through small adjustments over time. Understanding where your money flows each month is the first step. Identifying the fixed expenses that take the largest portion of your income helps you see the structure of your finances clearly. Building even a small emergency fund can slowly change the situation. When unexpected problems happen, having savings prevents those expenses from wiping out your bank account completely. That buffer gives your finances breathing room. Another helpful step is becoming more aware of everyday spending. This doesn't mean eliminating all enjoyment from life. It simply means noticing where small, repeated expenses might be draining more money than you expected. Financial stability rarely gets built through one dramatic decision. It grows through awareness, consistency, and patience. Many people who eventually achieve stable finances once experienced the same cycle of watching their bank balance fall towards zero every month. The difference is that over time, they built systems that slowly reduced the pressure on their income. Small savings grew, spending became more intentional, unexpected expenses became less destructive. If your bank balance keeps resetting every month, you're not alone. Millions of people experience the same cycle. Understanding how money moves through your life is the first step towards changing that pattern. Because once you understand the flow of your money, you begin to gain control over it instead of constantly reacting to it. This is the Black Wealth Guide, and we're learning how money really works step by step.